Hi, it's Charlie giving you Monday's market commentary and hope you're very well. Just start off with the FTSE here. FTSE, we are so close to the highs of 2007 over here at 6751 is the price there of the highs. So we're so close, and we're sitting around the same levels here as I'm recording this at 20 past 11 this morning. So I think there's two different things we can look for here on the FTSE as far as targets are concerned. One would think that we are going to hit that level. Whether it's going to be this week or not, you never know, but that's got to be a target, 6751. But also on the daily charts, we're having a great run here. I think at any time we could want to pull back into my bands and hit these lower bands at 6650 as we currently are. So there's two levels for you there. On the downside, 6650, and the upside is 6750 area. Ultimately, I think that when we do start to pull back, then ultimately these prior highs here at 6550 would be a valid place for a pullback, which would come in currently at least with the 21 period moving average on the daily charts there. So that's the look at the FTSE. I wanted to start off with today with a subject matter which is so important, and it's delayed gratification versus instant gratification, because most traders tend to go for instant gratification, i.e. they want to bank their profits as quickly as possible, or it could even be that they need to make sure that they make their profits on a monthly basis every month, and of course that's what we all want to do. But the thing is that let's say they have a losing month and they immediately want to skip to something else, another strategy, another system that they may be using, or whatever it may be, and want to skip from one thing to another. And the difficulty with that is that you're never giving anything long enough to see if it's working for you. And so, but bringing it down onto micro level, let's talk about actual trading. Then it's the same thing that happens in that traders often they'll get in, let's say at this level, and for whatever reason they may take profits there, and yet the market could have run up to here. And it's that instant gratification which makes you feel good, in that urge to take the profit into this zone only to then see it go higher. Now, we never know, traders do not know where a price is going to stop, so you have to take profits off at certain levels. But it's always that you get to that point where you're trying to run a trade, and just to see if you can get that follow through, because that follow through is what makes you the extra bonus. It's a bit like the trade I took on Friday's update. I'd got some profits off and then was looking for that big runner on the final bit, and that's what can make you your bucks. The frustrating thing for a lot of traders is that if they find that it doesn't run, then the next time that they have a trade, they revert back to this type of mentality and take the profits too soon. What does that ultimately mean? It means that their equity curve is going to be flat to marginally increasing, because they won't allow their profits to run, and for that reason therefore as soon as they take their losses, the losses just absorb any of the gains they may have just taken, and so they end up in a situation where their account is sort of doing this: it's going up, it's coming down, it's going up, it's coming down. So it's that type of behavior which can create that. So if you've got that type of account, you really need to have a look at how you're taking your profits, because too often traders just look at whether they've got a winner or losing trade, and there's so much more to it. And this is why it's important to have a trading plan, trading journal, so that you can actually go back over and review your trades and say, actually, yeah, I just took my profits too soon there. If I'd have let that one run, that one would have more than paid for this loser here, and so on and so forth. So just have a look at and see what you're doing, and see if you can tweak it a little bit. There's always going to be levels at where you're going to need to take some profit off the table, but are there areas where you can say, actually, yes, I could have actually taken a bit more out of this trade if I'd have just left a final segment in or something like that. So just something to bear in mind there. Okay, let's quickly have a look through the markets. I mean, obviously I only did market commentary on Friday. I'm still looking at oil. Oil's back into the 95s at the moment today, but like I've been saying now for 2 weeks or so, I'm looking for oil to push up back into the 97s and then break out. So it's just a nice looking pattern here overall. If we zoom out here on the daily charts, right back from the summer of last year, we've got this price pattern where we keep on nudging our head into this same sort of price area, and I'm going to be looking for us to ultimately break out of this $100 area. So that's what I'm looking for there on oil, and so we'll start to see that if we can see the price get back into that zone there. Let's have a look at a couple of the currencies, and then we'll wrap up. Now, The euro so far today has just started to sneak back into its bands here on the daily charts. I've still got this trend channel in place here, so if we take that to an intraday chart, if we can take that to an hourly chart, you'll see that intraday channel, which we're just contending with and trying to break, as you can see today. We've got this on an hourly chart. Let's see if I can extend it. There we go. So you can see that we've just come back, as you can see, we've come back to retest it pretty much at the moment. And so it's going to be a case of seeing if that's actually going to hold, and then we're going to ultimately come higher. I suspect that's what's going to happen. So I'm looking for the euro dollar to have a little bit of bounce over the next couple of days. That's how I would be looking at that, at least into these bands a bit. So back up to the 129 level, and maybe a little bit higher. It just looks that way with the way it's trying to break through this trend, sloping downwards trend channel, and so therefore the same sort of scenario is going to be there with the pound, and so we'll be looking for the pound to come up into its bands as well, maybe even get back up to its daily 50 as well. But ultimately, these currencies are still overall looking bearish at the moment, and so until proven otherwise. And what is proven otherwise? Well, really, we would need to get a close back above the 21-day moving average, which is miles off at the moment. So at the moment, it's just any bounces are just a bounce within what is looking like a bigger overall downwards move, but like I said, I'll be proven otherwise if we go up. Okay, let's we've done the FTSE. I think we'll pretty much wrap it up at that at the moment. I don't want to go through too much, so Kim will be back in touch on Wednesday, and I don't know if I'm going to be able to do the live trading on Friday because I'm away. So if I get the chance, Kim and I are then away on Thursday of the meeting. So I was going to say I'll try and do some live trading on Thursday instead and get it out for you on Friday, but I may not even be able to get to do that because I've got to be out on Thursday for a meeting in London anyway. So there may not be. It depends on whether I can squeeze a trade in early on Thursday morning before I leave. So we'll have to see. Anyway, Kim will be back in touch on Wednesday.